welcome to viewers from around the world to the event, The Pandemic Response, Building a Resilient and Inclusive Recovery. I am Asiya Mohammed, CEO of Conflict Women and a Frankfurt School alumna. I have the pleasure of being your moderator for today, and I'm joining you from my home country, Trinidad and Tobago, in the Caribbean. Before I introduce our speakers, a few words about today's event. COVID-19 has overtaken the world. It has affected every single person in some way and is fundamentally changing societies, economies, and countries. Today, we are here to understand its true impact, which has been particularly devastating for developing countries and on the most vulnerable communities, women, youth, the elderly, and migrants. But most importantly, we are here to find innovative solutions to creating change. This is precisely the focus of this year's World Bank Group's annual meetings, which will take place starting the week of October 12th and convene global leaders from government, business, and civil society. To set the stage for the meetings, we will hear today from World Bank Group President David Malpass and what it will take to tackle this crisis and how we can turn this into an opportunity to build a path towards a resilient and inclusive recovery. Mr. Malpass will be joined in conversation with Professor Stieglitz, President of Frankfurt School of Finance and Management. But first, we will hear from Dr. Jens Weidmann, President of the Deutsche Bundesbank, who is joining us from his office in Frankfurt. Dr. Weidmann has been President of the German Central Bank since May 2011. He is a member of the Governing Council of this ECB, represents Germany in the IMF and other international bodies, and has been chairman of the board of directors of the Bank for International Settlements since November 2015. Dr. Weidmann, welcome. The virtual floor is yours.
Thank you very much, Asiya, for your kind words of welcome. Ladies and gentlemen, it's a great pleasure and honor for me to be joining you today. As everyone here knows, addressing inequalities and realizing an inclusive and sustainable world requires jobs, education, healthcare, attention to the environment, and robust commerce, trade among neighbors and nations. This wise statement was made not recently, but more than a year ago by the president of the World Bank Group, David Malpass. Given the present crisis, however, these words sound very current and pressing indeed. A few months ago, millions of people lost their jobs, international supply chains were broken, children were unable to go to school, and health systems were at breaking point. And worst of all, many people have died. The World Bank's chief economist, Carmen Reinhart, summarized the economic fallout by saying, even by the standards of systemic crisis, this is a once-in-a-century global, truly global crisis. Germany was not spared by the crisis either. In the second quarter alone, the German economy shrank by 1/10. The depth and pace of the contraction were unprecedented. One reason for this was the stringent measures taken by the government to keep the pandemic in check. But consumers and businesses also behaved cautiously on their own account and held back on spending. When the protective measures were relaxed, people regained their confidence and the economy revived. Indeed, the German economy is likely to have grown strongly in the third quarter, albeit from a very depressed level. Though the rebound initially appears V-shaped, it is in fact becoming flatter. But a slowdown such as this has been expected. The recovery of the German economy is likely to be protracted and to remain incomplete for some time, since economic life is still constrained, whether this is due to government requirements or because people are choosing to social distance. Put differently, economic activity has passed through the trough, and while the first three meters of the climb out of that trough were comparatively easy, the upward path to the previous level is still long and fraught with uncertainties. A major source of uncertainty is how the pandemic will continue to unfold. Keeping the disease at bay, learning to achieve containment at decreasing economic cost, and eventually overcoming the pandemic are essential to sustaining the economic recovery. But that's easier said than done, as rising infection rates across Europe highlight, and for German industry, which is closely interlinked with our partner countries, it is also important that others regain their economic strength as well. However, the recovery in Germany also hinges on something else. Second-round effects need to be prevented so that they cannot intensify and entrench economic problems. Monetary policy is playing its part in this. Providing banks with ample liquidity, coupled with low interest rates, is crucial to ensuring that the economic crisis is not further aggravated by the financial system. Another risk is that businesses with previously solid fundamentals and a promising future do not make it through the crisis, setting off broad waves of insolvencies. Many people would lose their jobs and probably have a hard time finding new employment. Their skills and knowledge could begin to erode, which would darken their individual prospects, lower their lifetime income, scare the economy as a whole. And this is where fiscal policy needs to step in by providing rapid and comprehensive financial support for businesses and people during this difficult period. Fiscal policymakers have taken the right course of action in Germany and elsewhere. However, we also need to look at the bigger picture. The global nature of the crisis makes the situation particularly challenging, above all for emerging market and developing economies with their structural vulnerabilities. As the World Bank highlighted in its June report, EMDEs currently face headwinds from two sides. First, they have to contain the pandemic at home, thereby curbing the domestic economy. And second, they have to cope with the economic spillovers from the deep recessions in advanced economies. Commodity prices have plunged, global demand for goods has shrunk, tourism almost ground to a halt, and remittances have sunk markedly. Overall, the ranks of extremely poor people could swell by 70 to 100 million this year, according to World Bank estimate. Moreover, the World Bank fears that the current crisis might leave more and deeper scars than typical recessions. In particular, disruptions to schooling and an access to primary health care are likely to have a lasting impact on individuals, but also, as economists say, on human capital of population cohorts and at the aggregate level. According to UNESCO calculations, over 90% of pupils worldwide were impacted when school closures peaked, but as many as half of them are still affected today. Indeed, many schools remain closed, especially in the Middle East, the Americas, and Africa. What's more, remote learning capabilities are often far worse in less developed countries than they are industrial nations, with only parts of the population having access to online learning formats, for instance. When the OECD looked at the lowest income category in Latin America, only 1 in 7 primary school pupils had internet access at home. Recently, a World Bank calculation has shown the possible consequences of disruptions in the education process due to the pandemic. The number of what it terms learning-adjusted years of schooling could fall on average by more than half a year, and this could lower expected lifetime earnings by 5%. And as the alternatives to school learning do not serve pupils equally, the current crisis is also likely to exacerbate income inequality, especially in EMDEs. The magazine The Economist recently summed the problem up particularly well, and I quote, "This coronavirus affects everyone, but not equally. The rich shrug off the economic shock, the poor cannot." Fortunately, the World Bank is very much a key player in global crisis management and in supporting low-income countries. Since the beginning of the crisis, it has been able to provide funds and advice quickly and also efficiently For example, the emergency health support has reached 111 countries. Overall, the World Bank Group will be mobilizing resources at an unprecedented scale. And with that, it is high time to introduce to you the head of this essential institution, and may I say, the driving force behind its crisis response. I would like to welcome David Malpass, President of the World Bank Group for the past 1.5 years. International economist and, somewhat unusually, holder of a bachelor's degree majoring in physics. David, you've worked in very different settings over your lifetime. I imagine that during your career, you have often quite intuitively applied the lever principle, using it to achieve maximum progress with a given amount of force. You did this at various private sector enterprises, including a long stint as chief economist at Bear Stearns, and later when you started your own company, but you also served the public, spending many years at the US Treasury as far back as the Reagan administration. Your task at that time included a wealth of foreign and development policy issues, which already brought you into contact with the World Bank. In 2017, you returned to the US Treasury and became Undersecretary of the Treasury for International Affairs. And as you represented the United States in international settings, our paths crossed at numerous G7 and G20 meetings. David, Tom Keene, the editor-at-large at Bloomberg News, once praised a whole host of your talents. What he stressed most of all, though, was your hands-on approach. To paraphrase Tom Keene's words, others talked, but you did. Qualities such as this are important, particularly in times of crisis. So it is with great anticipation that we await hearing what you have to say today about the outlook for the global economy, the impact of the pandemic in developing countries, and the World Bank's agenda. I wish you all new insights and a fruitful and intense debate. Good to see you. David, the floor is yours.
Good to see you. Thank you very much, Jens, for that very nice introduction. Thanks also to Asia Mohammed, and thanks to Frankfurt School and to the Bundesbank for hosting me virtually. I look forward to engaging with you and taking questions from students who will be future business leaders in a post-COVID world. I'm here to set the stage ahead of the IMF and World Bank Group's annual meetings, which will focus primarily on COVID and debt, and will also engage partners in urgent discussions on human capital, climate change, and digital development. Before I begin, I would be remiss not to mention that this is the first time that the positioning speech for the World Bank Group annual meetings is being held in continental Europe. Germany is a major anchor for the World Bank Group and the rest of Europe. It is IBRD's fourth largest shareholder and the fourth largest contributor to IDA. And Chancellor Merkel has always been a strong supporter of World Bank Group priorities, including tackling debt and COVID, as well as action on global public goods. I understand that these priorities are also the focus of Germany's EU presidency, which runs through the end of 2020. As Jens said, the COVID-19 pandemic is a crisis like no other. Its toll has been massive, and people in the poorest countries are likely to suffer the most and the longest. The pandemic has taken lives and disrupted livelihoods in every corner of the globe. It's knocked more economies into simultaneous recession than at any time since 1870. And it could lead to the first wave of a lost decade burdened by weak growth and a collapse in many health and education systems and excessive debt. The pandemic has already changed our world decisively and forced upon the world a painful transformation. It has changed everything: the way we work, the extent to which we travel, and the manner in which we communicate, teach, and learn. It has rapidly elevated some industries, especially the technology sector, while pushing others toward obsolescence. Our approach has been comprehensive, focused on saving lives, protecting the poor and vulnerable, ensuring sustainable business growth, and rebuilding in better ways. Today, I'm going to focus on 4 urgent aspects of this work. First, the need to redouble efforts to alleviate poverty and inequality. Second, the associated loss of human capital and what must be done to restore it. Third, the urgent need to help the poorest countries make their government debt more transparent and permanently reduce their debt burdens. Those are 2 necessary steps to attract effective investment. And finally, how can we cooperate to facilitate the changes needed for an inclusive and resilient recovery? First, on poverty and inequality, COVID-19 has dealt an unprecedented setback to the worldwide effort to end extreme poverty, raise median incomes, and create shared prosperity. Jens has referred to the World Bank's new poverty projections, which suggest that by 2021, an additional 110 to 150 million people will have fallen into extreme poverty, living on less than $1.90 per day. This means that the pandemic and global recession may push over 1.4% of the world's population into extreme poverty. The current crisis is a sharp contrast from the recession of 2008, which focused much of its damage on financial assets and hit advanced economies harder than developing countries. This time, the economic downturn is broader, much deeper, and has hit informal sector workers and the poor, especially women and children, harder than those with higher incomes and assets. One reason for the differential impact is the advanced economy's sweeping expansion of government spending programs. Rich countries have had the resources to protect their citizens to an extent many developing countries have not. Another is central bank asset purchases. The scale of such purchases is unprecedented and has successfully propped up global financial markets. This benefits the well-to-do and those with guaranteed pensions, especially in the rich world, but it's not clear, either in textbook theory or in practice, how 0% interest rates and ever-expanding government asset and liability balances will translate into new jobs, profitable small businesses, or rising median income, key steps in reversing inequality. Poorer economies have fewer macroeconomic tools and stabilizers and suffer from weaker health care systems and social safety nets. For them, there's no fast way to reverse the sudden reduction in their sales to consumers, their sales to consumers in advanced economies, or the almost overnight collapse in tourism and remittances from family members working abroad. It's clear that sustainable recoveries will require growth that benefits all people, and not just those in positions of power. In an interconnected world where people are more informed than ever before, this pandemic of inequality, with rising poverty and declining median incomes, will increasingly be a threat to the maintenance of social order and political stability, and even to the defense of democracy. Second, on human capital, developing countries were making significant progress before COVID-19, and notably were starting to close gender gaps. Human capital is what drives sustainable economic growth and poverty reduction. It consists of knowledge, skills, and quality of health that people gain over their lives. It is associated with higher earnings for people, higher income for countries, and stronger cohesion in societies. Since the outbreak, however, more than 1.6 billion children in developing countries have been out of school because of COVID-19, implying a potential loss of as much as $10 trillion in lifetime earnings for these students. Gender-based violence is on the rise, and child mortality is also likely to increase in coming years. Our early estimates suggest a potential increase of up to 45% in child mortality because of health service shortfalls and reduction in access to food. These setbacks imply a long-term hit to productivity, income growth, and social cohesion, which is why we're doing everything we can to bolster health and education in developing countries. In the areas of health, the World Bank Group worked with our board in March to establish a fast-track COVID response that has delivered emergency support to 111 countries so far. Most projects are now in advanced stages of disbursement for the purchase of COVID-related health supplies, such as masks and emergency room equipment. Our goal was to take broad, fast action early and to provide large net positive flows to the world's poorest countries. We're making good progress toward our announced 15-month target of $160 billion in surge financing, much of it to the poorest countries and to private sectors for trade finance and working capital. Over $50 billion of that support takes the form of grants or low-rate, long-maturity loans, providing key resources to maintain or expand healthcare systems and social safety nets. Both are likely to play a key near-term role in survival and health for millions of families. We are also taking action to help developing countries with COVID vaccines and therapeutics. I announced last week that by extending and expanding our fast-track approach to address the COVID emergency, we plan to make available up to $12 billion to countries for the purchase and deployment of COVID-19 vaccines once the vaccines have been approved by multiple stringent regulatory agencies around the world. Our private sector arm, the International Finance Corporation, or IFC, is investing heavily in vaccine manufacturers through the $4 billion Global Health Platform. IFC is also working with the Vaccine Partnership, CEPI, to map COVID-19 vaccine manufacturing capacity, focusing especially on potential bottlenecks. To mitigate the impact of the pandemic on education, the bank is working to help countries reopen primary and secondary schools safely and quickly. Out of school, children tend to backslide in their education skills. And for children in the poorest countries, physical attendance in school is an important source of food, security, and connectivity, not just the reading and math that provide a critical ladder out of poverty. In Nigeria, for example, we provided $500 million in new funding for the Adolescent Girls Initiative for Learning and Employment, which aims to improve secondary education opportunities among girls. The project is expected to benefit more than 6 million girls using TV, radio, and remote learning tools. My third urgent topic is debt. A combination of factors has led to a wave of excessive debt in countries where there is no margin for error. Global financial markets are dominated by low interest rates, creating a reach-for-yield fervor that invites excess. This is reinforced by an imbalance in the global debt system that puts sovereign debt in a unique category that favors creditors over the people in the borrowing country. There's not a sovereign bankruptcy process that allows for partial payment and reduction of claims. As a result, people, even the world's poorest and most destitute, are required to pay their government's debts as long as creditors pursue claims. Even so-called vulture creditors who acquire the distressed claims on secondary markets, exploit litigation, penalty interest clauses, and court judgments to ratchet up the value of the claims, and use attachment of assets and payments to enforce debt service. Even those creditors must be paid. In the worst case, it's the modern equivalent of debtor's prison. Further, the political incentive and opportunity for government officials to borrow heavily has increased. Their careers benefit from the availability of long maturity debt because the repayment cycle is often well after the political cycle. This undermines accountability for debt, making transparency much more important than in the past. An added factor in the current wave of debt is the rapid growth of new official lenders, especially several of China's well-capitalized creditors. They've expanded their portfolios dramatically and are not fully participating in the debt rescheduling processes that were developed to soften previous waves of debt. To take a first step toward debt relief for the poorest countries, at the World Bank spring meetings in March, I, along with Kristalina Georgieva of the IMF, proposed a moratorium on debt payments by the poorest countries. It was partly a response to COVID and the need for countries to have fiscal space, and also a recognition that a debt crisis was underway for the poorest countries. Recall the challenge of the vulture creditors I mentioned earlier. With endorsement by the G20, G7, and Paris Club, the Debt Service Suspension Initiative, or DSSI, took effect on May 1. The DSSI has also enabled us to make significant progress on debt transparency, which will help borrowing countries and their creditors make more informed borrowing and investment decisions. This year's edition of the World Bank's International Debt Statistics, to be released next Monday, October 12, will provide more detailed and more disaggregated data on sovereign debt than ever before in its nearly 70-year history. Many more steps are needed on debt relief. One avenue is to broaden and extend the current debt initiative so that there is time to work out a more permanent solution. The World Bank and IMF have called on the G20 to extend the DSSI's relief through the end of 2021, and we are highlighting the need for G20 governments to urge the participation of all their private and bilateral public sector creditors in the DSSI. Private creditors and non-participating bilateral creditors should not be allowed to free ride on the debt relief of others and at the expense of the world's poor. Debt service suspension is an important stopgap, but it's not enough. First, too many of the creditors are not participating, leaving the debt relief too shallow to meet the fiscal needs of the inequality pandemic around us. Second, debt payments are simply being deferred, not reduced. It doesn't produce light at the end of the debt tunnel. This is particularly apparent in today's low-for-long financing environment. The normal time value of money simply isn't working, so the creditor's offer of a deferral of payments with a compounding of interest often means that the burden of debt goes up with time, not down. The historical use of net present value equations in debt restructurings has to be scrutinized for fairness to the people in the debtor countries. The risk is that it will take years or decades for the poorest countries to convince creditors to reduce their debt burdens enough to help restart growth and investment. Given the depth of the pandemic, I believe we need to move with urgency to provide a meaningful reduction in the stock of debt for countries in debt distress. Under the current system, however, each country, no matter how poor, may have to fight it out with each creditor. Creditors are usually better financed with the highest paid lawyers representing them, often in US and UK courts that make debt restructurings difficult. It is surely possible that these countries, two of the biggest contributors to development, can do more to reconcile their public policies toward the poorest countries and their laws protecting the rights of creditors to demand repayments from these countries. Several steps are needed. First, full participation in the moratorium. Second, full transparency. Third, a careful analysis of a country's long-term debt sustainability. This degree of transparency and analysis would also be strongly beneficial for the public commitments of developed countries, such as outlay projections for public pension funds. Fourth, we need new tools to push forward with the reduction of the stock of debt for the poorest countries. The World Bank and IMF are proposing to the Development Committee a joint action plan for the end of 2020 for debt reduction for IDA countries in unsustainable debt situations. My fourth topic is on fostering an inclusive and resilient recovery. COVID-19 has demonstrated with deadly effect that national borders offer little protection against some calamities. It has underscored the deep connections between economic systems, human health, and global well-being. It has concentrated our minds on building systems that will better protect all countries the next time, especially our poorest and most vulnerable citizens. It is critical that countries work toward their climate and environmental goals. A high priority for the world is to lower the carbon emissions from electricity generation, meaning the termination of new coal and oil-dependent power generation projects and the wind down of existing high-carbon generators. Many of the largest emitters in the developing world, but I must say also in the developed world, are still not making sufficient progress in this area. Amid the pandemic, the World Bank Group has remained the largest multilateral financier of climate action. Over the last 5 years, we have provided $83 billion in climate-related investments. Our work has helped 120 million people in over 50 countries gain access to weather data and early warning systems, crucial to saving lives in disasters. We've added a total of 34 gigawatts of renewable energy into grids to help communities, businesses, and economies thrive. I'm happy to say that in fiscal year 2020, just completed on June 30th, my first full year as president, the World Bank Group made more climate-related investments than at any time in its history. We intend to step up that work over the next 5 years. We are helping countries put an economic value on biodiversity, including forests, land, and water resources, so they can better manage these natural assets. We're helping them assess how climate risks affect women and others who are already vulnerable. We are also working with governments to eliminate or redirect environmentally harmful fuel subsidies and to reduce trade barriers for food and medical supplies. Global progress in this area, however, has remained slow. COVID-19 spending packages could have a decisive effect on promoting more low-carbon energy sources and facilitating a stronger, more resilient recovery. And on the economy itself, recognizing the severity of the downturn and the likely longevity, a key step in a sustainable recovery will be for economies and people to allow change and embrace it. Countries will need to allow capital, labor, skills, and innovation to shift to a different post-COVID business environment. In conclusion, I raised the urgency of addressing poverty, inequality, human capital, debt reduction, climate change, and economic adaptability as elements in ensuring a resilient recovery. This once-in-a-century crisis has demonstrated why history doesn't exactly repeat itself, because humankind does learn from its mistakes. The pandemic so far has not triggered the devastating side effects of earlier crashes, neither hyperinflation, nor deflation, nor widespread famine. Even though the loss of income and the inequality of the impact have been worse than in most past crises, the global economic response so far has been much bigger than we might have expected at the start of this crisis. The development response will need to be extended and intensified, both in terms of the health emergency and the efforts to help countries find effective support systems and recovery plans. Greater cooperation will enable us to share knowledge and develop and apply effective solutions far more swiftly. It will enable innovators to develop a vaccine that beats the virus and restores people's confidence in the future. Working through all channels, my hope and my belief is that we can shorten the downturn and build a strong foundation for a durable model of prosperity, one that can lift all countries and all people. Thank you very much.
Thank you very much, Mr. Malpass, for those excellent points. To delve deeper, we are joined by Professor Niels Stieglitz, President of Frankfurt School, who will provide a reaction and is joining us today from the campus in Frankfurt. Professor Stieglitz previously served as Vice President of Corporate Development, Head of the Management Department, and as a Professor of Strategic Management. He worked as an Associate Professor at the University of Southern Denmark and teaches strategy and organizational design. Welcome, Professor Stieglitz.
Well, thank you, Mrs. Mohamed, for the kind introduction and also for giving me the opportunity to share some thoughts with you today. So, Mr. Malpass, thank you very much for your inspiring and truly important speech. I think it highlights the challenges of and the solutions to the global pandemic. And I would like to make 3 points. First of all, I really appreciate how you perceive the pandemic as a truly global challenge that affects the developing countries even more strongly than the developed economies. Global growth and inclusive prosperity will only pick up forcefully again when the global community tackles the COVID-19 health crisis together. And I firmly believe that purely national responses will only have a very limited effect. And I think the same is also true for the second big challenge that we face, and that's climate change, right? So that's my first point. Second point, I also agree that the pandemic does not only, but it also poses profound challenges for education. We as Frankfurt School believe that education is a powerful engine for inclusive growth. And we offer many programs in developing countries and emerging markets. In the past couple of months, we had to move our teaching online, especially our summer schools over the summer. But that had actually a very beautiful side effect, that we had a record number of participants from developing countries joining us. And we made substantial investments into digital technology, and we experienced firsthand how digital technology and digital transformation is breaking down barriers and is making education a lot more accessible than just a year ago. And I think our own experience also demonstrates that digital transformation opens up many new opportunities, not just in education, and thereby provides the foundation for future sustainable growth. Last point, I also agree that excessive government debt puts a burden on the younger generation that has been especially hard hit by the COVID-19 pandemic, but also on private enterprise. And I think it's really great news today that the World Bank will put a lot more emphasis on debt relief and active debt management as a response to the pandemic. What obviously interests me as a professor of strategy is how the World Bank will adapt its long-term strategy to foster sustainable and inclusive growth moving forward. Thank you. Mr. Malpass.
Mr. Malpass, over to you.
Okay, thank you. I lost the very end of that question. So I heard the whole first part. Can I respond to that? Or Dr. Stieglitz, thanks for your work. What would the sound went out? Sorry. What was
okay, I'm very, very sorry for that. I think, as I said, I think what really interests me, I think in your speech, you told us about how the World Bank is going to rise to the challenge posed by the COVID-19 pandemic. But what I'm interested in as well is how the World Bank is going to adapt their long-term strategy moving forward, given the current challenges.
Yes. Okay, thanks. And I'm sorry, we have kind of a delay in our system. So if I hesitate in a response, it's a little bit the delay. So your points were very well taken. You know, one of the things the bank that we are trying to do is find the spots of international coordination and working with people that are most effective in delivering on the mission of the World Bank. So we're very focused on developing countries, but we also recognize that the pandemic is a grave crisis for the developed countries as well. So one of the things we want to do is learn from learn from developed countries what is applicable in developing. One of the areas where people all around the world have some of the same challenges is in getting back to school. How do you do it well and effectively? I'm glad to hear that Frankfurt School has had more participation by developing country students. That's great, and that shows us the importance of digital connectivity, but also it's almost like there's nothing good in total that's coming out of the pandemic, but there are good things in terms of the advances in technology, the use of the internet and of digital and of distance learning. Those, I think, are quite positive. We can sometimes say what challenges us makes us stronger. And one of the things we can try to strengthen is the way people talk together in confronting the same challenge. It's interesting and humbling that everyone around the world is facing the same thing at the same time, which is a very rare, if ever, occurrence for humankind. So we can try to find ways that we in common tackle the communication challenges, the technology challenges, and the recovery challenges.
Thank you. Thank you so much, Mr. Malpass. Back to you, Professor Stieglitz.
Well, just as a follow-up question, because I found this quite interesting what you said at the end, Mr. Malpass, that we are learning together, that we have to frame the crisis together, that we also have to find solutions together. Do you also feel that this could become a template of how we can also tackle the climate change and how we can align policies within the global community, given that, quite fundamental challenge that we're all facing?
Yes, I think there can be a lot of learning experience from people working together to confront the COVID challenge. As I mentioned in my remarks, a key aspect of the climate change is to lower the carbon emissions from electricity production, and I think from energy in general. That's proving a challenge around the world because different countries approach it differently. So there are many approaches that are useful and needed. It's a little like the COVID challenge, where we need action in multiple areas in order to make headway. The same is true on climate. So for some countries, that means they don't have electricity generation at all. So they need to start from a low level of output and have low carbon sources that can push them forward. For other countries, they already have generation, but it's in a high carbon variety of electricity generation. That means quite a different kind of approach to what they're going to do. One example of that is South Africa, which has substantial electricity generation, but of the very high carbon output kind. In Pakistan, there's a big increase in high carbon sources of energy underway, of electricity underway, even at a time when the country has ample hydroelectric generation capacity, the access to natural gas from the Middle East, and large investments in solar and wind that the World Bank has been instrumental in encouraging. And so you have this dichotomy where the total energy production is going up on the high carbon side, when what you want is lower carbon, very low carbon energy sources. So these are areas that I think dialogue can help, and also data can help, knowledge can help, and that's similar to COVID.
Excellent conversation, gentlemen. You raised some excellent points. We will now take a few questions from our future leaders. Please allow me to turn the floor over to our Frankfurt School students.
Thank you so much for your insight, Mr. Malpass. My name is Leona. I'm from Germany, and this is my friend Jaskaran from India. We're both bachelor students at Frankfurt School. We have thought about the role and responsibility of the European Union, especially during this pandemic and beyond. As you mentioned, the pandemic has posed major challenges, not just to developing countries, but also to developed ones. As a result, greater international cooperation and collective responsibility is needed in this time of crisis.
On those lines, Mr. Malpass, our question is, are there effective policies that World Bank and the European Union together have implemented in order to support the developing economies during the pandemic? And if not, are there any upcoming policies that you think can significantly contribute towards an inclusive and resilient recovery from the pandemic?
Thank you. Very interesting question. We work closely with various parts of the European Union. As you know, it's become a large set of policymakers and also of regulatory policies, and also of funding for some of the development programs around the world. So we interact on each of those levels, often through Brussels, but also in national capitals as well. So I think we can work together, and we do that. You know, World Bank is heavily involved in Gavi and CEPIs, two of the organizations that are involved in vaccines, therapeutics, and in the development of vaccination campaigns. We also work with the Global Fund, which the European Union has been a participant in. So it's a good relationship. I would say that some of the challenges sometimes could be more focused. One of them is the Eastern European side of the European Union faces large energy challenges that I can't think where improvements can be made, and that's one aspect of it. And I wanted to also mention the leadership of the European Union in its human rights focus can continue and be strong and be a leader for the world. Now, in other areas, I want to say that development itself, I think, is very much a country level and knowledge level activity. So the World Bank is well positioned to interact with countries directly, and then to invite additions and comments and co-financing. I mentioned our COVID process, and our COVID response was specifically designed to invite co-financing by entities such as the European Union, and our vaccine programs as well allow and invite co-financing, and that's one way that the European Union could directly apply funding into some of the most the poorest countries around the world, if it were so inclined. It's a very efficient way to extend assistance, and we welcome.
Being uniquely confronted by this pandemic, We are thinking and worrying about our future challenges, but also about the place of developing economies, especially regarding the climate crisis. We know it is our responsibility to help better the lives of those who do not have the same privileges as we do.
My home country, Ecuador, is suffering under the effects of the climate crisis. Agriculture is our main sector, but floods and droughts destroy the livelihood of the poorest people. The climate crisis is a challenge which was created especially by rich countries, but developing countries are suffering the most. What more can be improved by the World Bank, and what can be done to correct this for our generation?
Yeah, thank you. Well, in my remarks, I alluded to one of the challenges as we try to move toward lower carbon electricity generation is the challenge for developed countries themselves. And this is captured in your question that the developed countries often are using and continuing to expand their high carbon output even at a time when it has global effects through global public goods. So we're working actively on various aspects of global public goods to recognize that the costs apply to people outside countries' own borders. For example, in China, we're working on marine plastics, which is, they're a large emitter of marine plastics into the world's oceans, which has an effect on countries all over the world, including in Ecuador, which has very substantial investments and dependency on fishing, on the fish industry, and it's one of their mainstays and is very affected by the environment and by climate issues. So we can all work together on programs. The World Bank has Pro-Green and Pro-Blue. These are umbrella trust funds that welcome co-financing from countries around the world that are specifically aimed at addressing climate challenges. And as I mentioned in my remarks, the bank is the biggest financier of climate co-benefits through our various programs that work really in developing countries, but also provide information to address the problems on a global basis. Thanks.
Thank you. Today's discussion is really important. I feel like you've touched on so many key points: debt, inclusion, poverty, equality. And we're fortunate to have persons joining us from every corner of the world: Africa, Latin America, the Caribbean, Asia, Europe, North America, and Australia. Some today may be unemployed. Women, children, and men may be caught in the silent epidemic of rising gender-based violence, while others are struggling with multiple crises, including natural disasters and wars, or may lack basic access to food, electricity, the internet, clean water, and healthcare. So before we leave today, let us share messages of hope and inspiration for those who most need them. Professor Stieglitz, what is one final thought you'd like the audience to take away from today's conversation?
Well, I think it's important to understand that every crisis also creates many opportunities. But at the same time, I think we need private enterprise to pursue these opportunities, right? And I think this is something that we will also have to focus on in dealing with the COVID-19 crisis. So sometimes I wish to see a little bit more emphasis on how we can foster entrepreneurship in private enterprise in dealing with this crisis.
Thank you. And Mr. Malpass, the same question to you, please.
I appreciated Dr. Stieglitz's answer. I cut from my spoken remarks a section on how to help entrepreneurs, small businesses in this time of crisis and change. And so just to directly continue the point Dr. Stiglitz made, one of the important parts of recovering from COVID will be preparing for that different kind of economy that will come post-COVID. And one part of that is a very financial challenge of how do you allow assets to move to the new economy? How do you allow people and their skills to adjust to a new environment? And so that's one of the big challenges for the developing world, that we can't simply reflect all of the previous assets as being write-offs. We have to find ways that many of the previously built assets and skills of people, the human capital, has to be utilized in a different way in the post-COVID environment. The digital connectivity can help a lot, but also leadership. We need people to embrace change and it to be a social and I think a global kind of spirit that we can get ahead and there can be resilience into the future.
Thank you, gentlemen. I am heartened by the vision that you've shared today of our speakers who are utilizing their influence and institutions to tackle the impact of this pandemic. More than anything, COVID-19 has taught us to value each other and to value human connection. Today's conversation gives me a new sense of optimism that the human spirit will continue to triumph even in the face of this challenge, and that together we can build a more promising future. You can continue to follow the conversations during World Bank Group annual meetings. Check worldbank.org for more information on the events that will take place starting October 12th. Thank you for watching and goodbye.
Thank you, Asi.